Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Wednesday the 28th of July. Now it is the FOMC meeting today, so markets are a little bit cautious in front of that, little real direction, although there is a slight edge of risk aversion which has come in. Generally speaking, the Chinese clampdown on tech companies is starting to impact a little bit. It's interesting that we've got the big tech earnings out of the States. Really, earnings are smashing expectations at the moment, but we're not really seeing the upside impact on share prices. So that's something to keep an eye out on. But it's interesting that in front of this FOMC meeting, we've started to see the dollar just losing a little bit of its strength, certainly against the euro, but more impactfully through the sterling price as well. So cable up and euro starting to show signs of a bit of support as well. But it'll be interesting to see how the markets react to the Fed meeting, because there's no real expectation on the Fed making any surprises in this meeting. Fed Chair Powell was pretty consistent in his congressional testimonies recently, consistently going on about how transitory inflation was still there, feeling, and also that they wanted the labour market to improve more before they really saw any sort of suggestion that they would be tapering asset purchases. So the markets will be fairly sort of quiet, I think, in front of the Fed. Maybe a bit of reaction on the Fed, but I think more so we'll be looking out for what's to come really from the Federal Reserve rather than what they'll be doing at the moment. So with regards to the INFINOX support and resistance table, that is at the end of the video. Now, the chart analysis we're doing today, we're looking at that little pickup in euro dollar, slight improvement in momentum, and we'll show what euro needs to do to really suggest a recovery is in play. Also looking at the gold price analysis. Well, gold price is fairly quiet at the moment. Is it going to pick up again is the question. And also finally on the SP 500 futures, well, the SP has just slightly fallen back a little bit on those tech stocks, which have pulled back a slight amount, but is this another buying opportunity? So let's have a look at the charts. And onto the INFINOX MT5 platform now. Just a very quick start to look at the dollar index, where you can just see this run high. It's just rolling over in the last week or so, lacking the momentum. You can see the RSI, which is falling away. Nothing too decisively negative, mind you, still above 50 on the RSI, but you'd be looking out for whether this move just starts to lose its impetus and maybe turns into a range or even turns corrective on a move below 91.90. So we can extrapolate that to euro dollar, where euro dollar has again been selling off. But again, the selling pressure is just easing slightly. You can see this slight turn up in the last few days as the momentum indicator of the RSI has started to pick up slightly above 40 and back above this moving average. Nothing too decisive yet in terms of recovery plays. You'd look on the 4-hour chart. Let's just zoom out one level there. 4-hour chart, you can see that that resistance at 1850 is the first real one to come in, and then you start looking at 1880, 1890 as your next big level. But these are the levels you need to see euro through to start to improve. But you can see that the moving averages are picking up. The momentum is starting to improve on a net basis. You've got a nice basis of support around 18 figure. So these are the levels that we're looking out for, I think, on the Federal Reserve meeting. To 18 figure to hold. A move above 1850 post-Fed would certainly suggest that euro is starting to pick up. And on the gold chart, this is quite a long-term gold view. You can see that the big floor comes in around 1670, big resistance comes in at 1915, but within that you've now got these two pivot bands mid-range effectively, 1750 up to 1760 on the downside, above 1830 now on the upside as resistance. But within that, if I zoom in one more level, you can see that essentially 1790 is holding as a basis of support on the initial to the downside. And you can see the momentum is really quiet at the moment. 40 to 60 is indicative of a very quiet momentum market. So 1790 on the downside, we can see that on the 4-hour chart. 1790, any sort of foray into the low 1790s gets bought into, but equally anything above 1810 just is a struggle at the moment for gold. So really quiet trading, and you need to see these levels broken to suggest there is traction either way. And finally, on the SP 500 futures, well, you can see that the move to the downside that we saw yesterday has just taken a bit of the edge off that rally into all-time highs. But essentially, it's probably going to give another chance to buy because we can see this consistently, the rising moving averages, rising uptrend. Any sort of corrective move continues to be bought into. RSI just tailing off a little bit at 65, but anything back towards the 50 area, 45, 50 is a buying opportunity. And I think that we're just seeing a little bit of a near-term consolidation in front of the Fed. That support at 43.63 would be the first one I'd be looking at. If you break that to the downside, you're starting to see a near-term corrective move. But essentially, again, I'd be looking at using any near-term weakness back towards that uptrend, which comes in around 42.80. Anything back towards there is a good buying opportunity on S&P 500. Thanks a lot for watching this video. I hope you found it informative for your trading. Join me again on Friday, where we're digesting the US growth numbers and also looking at the Eurozone inflation data. So I'll leave you with the INFINOX support and resistance table, and I will wish you good luck for your FOMC trading, everyone. Thank you very much.